the hell has it got to do with horse racing? Well, horse racing is very, very simple. Horse racing trades the same way as the markets trade. There's a liquidity order book, a depth of market on horse race prices. On the exchanges, it trades exactly the same way as an auction. And the way you trade horse racing is very, very simple. There's a bid-offer spread, and there's obviously all the bets here. There's always all the bets here, the passive bets in these areas. There's a bid-offer spread just the same way as a normal depth of market. Now, obviously, if this is odds, which is a price, only one horse ever goes in this direction. Finally, that's the one thing you always remember about horse racing, right? There is only one horse that goes. Oops, wrong arrow. There's only one horse in a race that ever goes down to there. Does everybody understand that? There's only one horse in every race that goes to zero. Every other horse, and if there's 20 other horses, every other horse goes up this direction here, yes? Every other horse must go in that direction because they've not won the race, right? So guess what? The minute you start trading horse racing, you immediately put you immediately put the probabilities in your favor if you're a trader in the horse racing industry by laying to back horses, laying to back. That means you lay the horse to lose first, and then you back it whenever you think you need to back it. So how do we trade this? Well, very, very simple. When a horse makes a mistake, so let's assume the horse is running and this is the current price of the horse here. When a horse makes a mistake, the idea is the horse will jump in probabilities that it's going to lose the race. So a horse makes a mistake, the price jumps up to here. Now obviously, if the horse was originally fair valued at this price level, the price sometimes then just trades back into this level. So I'm going to lay this horse at this price on a regular basis. Why? Because if I lay the horse at that price, it's already made a mistake at that price. It's already traded at that price. It's not traded any lower. Then I've got a very good chance that with a horse that's made a mistake, if anybody's ever been involved in horse riding or horse racing or show jumping, when a horse hits a fence, it uses, or it stumbles, it uses a lot of energy to correct itself. Just like if you fell, you'd be a little bit wearier and a little bit sorer or a little bit stiffer if you had taken a little bit of a stumble, right? A little bit wearier. So it takes a lot more energy to get back up to speed. Well, that energy is expended by the time you get to this price here. So that should never trade that price again unless it's just literally a blip. And it literally is just a blip. So I start laying the horse to lose at this price, knowing that only one horse will ever go down in that direction and every other horse will go in that direction. And we make, on average, probably about the syndicate makes about on average between £500 and £1,000 every time there's a horse race, just doing this strategy. Now, 500 to £1,000 doesn't sound a lot, except of course that sometimes we get 50 horse races in the UK, so we make between £25,000 and £50,000 a day just betting on horses to lose races. And that's obviously just the algorithm's already on top of that. It already does those trades for us. But the truth of the matter is this is very similar to the price volume trend. So when I see the price volume trend, what I'm interested in is key levels. Now, obviously, in a 5-minute chart, we can take it down to a 1-minute chart, and I'll show you what I mean by this. If I take you down into a 1-minute chart on the price of volume levels, what I'm looking at is I'm looking for the levels that give us some insight into where the price may go bullish. And if you're looking at PVTs, all you're doing is finding when the price spikes and doesn't reverse back off the spike. So, for example, there's one right there. There's one right there. There's one right there. There's one right there. And you just mark these areas on your screens. Why? Because if the price ever gets back to those, there's a very good chance there's going to be an opportunity to deal in these areas. You start watching for big volumes, and there's a big volume, and there's an opportunity to deal. Yeah? So when you start to see these elements, you can start to recognize, excuse me, you start to recognize some of these areas, then obviously you're starting to watch to see. Now that had a big reversal candle against it, but it's still nonetheless something you'd be paying attention to. Then we got back into this previous low price, and another PVT comes away from exactly the same price area just there and there, guys. See it? See how easy it is to spot those two prices? Look at the volumes. And that's obviously what's just happened into the US cash market open. Remember we said that at the cash market open, we're always either getting the sell-off or getting the response to the buys at that stage. It's dead easy to spot, guys. It's dead easy to spot these things. You've just got to recognize that it's happening. If you don't recognize it, there's nothing you can do about it. If you don't recognize it, there's nothing you can do about it. How easy is that to see it, guys? Pretty simple, pretty straightforward. Well, I think it is. I think it's really, really easy to see these elements. But again, you've got to have it on your to-do list. You've got to have it on your to-do list. You've got to be ready to deal. You've got to be ready to act on those areas when it sets up and when it's getting ready to pop. You've got to be ready to pop with it, guys. You've got to be ready to pop with it. So if you're with me on the trade, take a little bit of money. We've ran out of puff at the top edge. It was worth about $1,000 on the swing. And, yep, nice enough, easy enough money from the bottom edges going into the cash market open. The market had twisted, of course, prior to the open. You can see the bubble forming just there. You can see the bubble forming quite nicely for that. You can see the red line made a higher high on that spike lower with a brilliant little sell ahead of it. We sold into this top edge here at 50s. Made ourselves some very nice $250 profits right there. And then coming into the actual open, you can see the red line spikes higher, the blue line spikes lower, the purple line's in the middle. That's the order we want to do things in. We buy off the bottom edge spring trade. You can see there's a beautiful little spring in there. And then we get the little pop to the upside, and you can see that we flip over just here. Purple line goes up, red line goes down. That's your exit price, guys. That's your exit. And there it is right there, guys. End of trade, end of day perhaps. But that's it, guys. We were in the market for the US market open for approximately 3 minutes. 3 minutes. We bought at a price of 30 to 25, and we exited at 30 to 25. We made ourselves $1,000 in 3 minutes per contract. And that's us finished on oil again. Finished, literally, potentially finished for the whole day on oil. $1,000 in 3 minutes. From the cash market open. So we try and get positioned into the cash market open. If we're not happy about the positioning, we simply avoid it. And that's obviously what you can do if you're not happy with the trade, if you're not happy with the levels. If you didn't get a lower low, for example, I would not have bought into this, but we did get a lower low. So because we got the lower low in that, we were able to clear our books and then get a little pop into some buys. We still had literally the big volume to kick off, and then all of a sudden, whoosh, the big volume came in. Buy side popper, and we made the big monies almost immediately. At the present moment, if I'm doing anything, I'm buying down ticks, but I'm not really that keen on it just yet. I'm looking at this as a key price level here at 85s, 86s, and that's where I'm going to be looking to maybe buy back into this. But at the moment, simply not good enough value in this at the moment. Simply not good enough value at the moment. But certainly, for me, a buy trade kicking off at the moment, not a sell trade, but a buy trade at the moment in here. Let's see if we get a lower low price. Straightforward, guys, yes or no? Pretty straightforward. Easy money? Definitely easy money, guys. Easy money. Gold is, oil's one of those markets that's, you've got to be fluid in it. It's a fast money market. It's got a lot of activities in it, and you've got to get busy with it.